Good morning, everyone. This is Brad Matheny. Today is March 9th, Monday. A lot of talk right now about the markets entering a major collapse phase, a Black Swan event. So let's try this. Or let's call it Iran conflict event. Now, what I'm coming to do is I'm coming to talk to you guys about this entire move. Okay. So, yes, we have a war with Iran. Yes, we have a conflict taking place. Yes, crude oil has skyrocketed. And yes, this is a reaction to the disruption of shipping through the Strait of Hormuz. Now, what we have to understand is that this disruption is and this reaction is likely shifting capital. And I've talked to you guys about this before. Capital always seeks safety, security, and growth. So always seeks these three things. Always. So if we get into an event where the Iran conflict, turns into a broader conflict, hypothetically, let's say some other countries over there decide they're pissed at America and they decide to, turn it into some kind of a regional conflict. We have the potential of this turning into a broader scope. But as I've been talking to friends, some of them are Iranian, some of them are not. The reality is that the clearing, the elimination of the threat of terrorism theoretically in Iran, if we're able to do so, would open up an immense economic opportunity in the region. Imagine Iran moving away from a terrorist type of a nation, funneling capital into other areas that are strategically, disrupting global supply chains. Imagine that's gone. Imagine Iran is now in a process of, moving towards a 21st century economic solution, being rebuilt around leadership that is capable of understanding the pathway forward is to maintain a let's call it a positive neutral stance rather than trying to engage in total all out conflict and war. And now if we get to that point, which is a fairly big if, then I think we're going to move into a very large growth phase. And I believe this process, the rebuilding, restructuring of the region, is going to likely take, 6 to 12 months to move into a growth phase. So right now, capital is seeking safety and security. And believe it or not, my analysis suggests that, energy obviously is the first reaction. Right now, utility sectors are a second reaction. Those are now top of the list on my TT scanner list. I believe that technology is seeing a major resurgence in uh, what we're doing. And here come all these notifications. I think technology is seeing a resurgence simply because capital is now rushing into the safety and security. So, in a global construct, where in the world is capital going to find safety in regard to currency disruptions and or economic disruptions? Where do you think in the world you're going to find safety for capital? My opinion is US, possibly UK, possibly Japan. Why Japan? Because Japan is key tied to the US and the UK as one of the second largest, uh, let's call it third or fourth tier economies on the planet. They have their own issues, but I think money would rush into Japan faster than it would rush into China. Security. Where would capital find security? In other words, no risk of capital controls, no risk of engaging in a broader conflict. I again think that the move would be US, UK, and Japan. And where do you think that the capital is going to try to find growth? And growth, I believe, is going to be in technology, innovation, utilities, dividends, and let's call it emerging markets. Now, emerging markets are going to be later stage, okay? But capital will immediately move to safety and security of the US dollar because the US economy is the strongest, most dynamic economy on the planet. It will also seek UK assets as the EU is essentially second to the US in terms of economic resilience. Now, there are issues in the UK and the EU simply because of, let's call them geopolitical issues and proximity to kind of the conflict in the Middle East compared to the US. But I believe the UK would be second most likely. And then lastly, I think the Japanese yen would likely see some influx of capital as long as, like I said, the disruption is fairly short lived. So now, the Black Swan event or the Iran conflict event, in my opinion, is going to consist of a 10 to 15 day, let's call it disruption event, followed by a 20 to 50 plus day, uh, let's call it carryover, uh, uh, call it dust settling, followed by a 60 to 120 day plus restructuring. Now, the big question with the Iran conflict and the disruption event is disruption in the Middle East could lead to extended regional, sorry, I wish my fingers would work, conflicts. So this is really where kind of a gray swan event could likely happen. Okay. And what I'm saying about this is that right now we're talking about trying to move Iran away from a terrorist type nation into a more 21st century global economy. And in doing so, I think that this is a very strong move for the US and for Iran. If Iran can pull this off, and if the people of Iran can learn to make the move and make the transition over the next 12 to 24 months, imagine what Iran would be like in a world where the threat of terrorism is gone. The that Iran moves into like Southeast Asia, you're talking about, Malaysia, Singapore, Indonesia, those types of areas, Philippines, where, attracting US business, moderate business friendly, a moderate Muslim country, particularly like Malaysia, which I've spent some time in back in the 90s. I mean, Malaysia is what I want to say is a wonderful country. Personally, I wouldn't move there and live there, although I have. I've got family here in the U.S. I've got people I need to take care of, and I can't be 9,000 miles away. But in terms of a threat to the world, Malaysia is pretty, complacent. And I think that's the move that everybody's hoping for with Iran. Now, if Iran does make that move, imagine Iran 12 or 18 months from now making a move into normalcy and complacency, still battling potentially little waves and cells of hardline Muslim groups, particularly around the area, Lebanon and Yemen and what have you. But really, with the support of the U.S. and other nations, making a move to a more moderate Muslim country and attracting global investment. You've got strongly educated people in Iran. You've got people wanting to grow, wanting to, move away from this. I'm assuming, at least the people I'm talking to here, are happy that a regime change is likely. And again, I'm talking about people I'm talking to in the US. I haven't run into anybody who is against what Trump is doing that is Iranian. And again, I'm sure there are some, but I just have not heard from them. So again, now imagine 12 months from now, the region settles, it's in a growth phase. Iran is rebuilding. Companies are considering growth and exploration of Iran in terms of resources and labor and manufacturing. Um, what would that look like for the region? What would it look like? Let's come over here and, take a look at this because I'm sure many of you have already kind of considered this. And let me get this up, zone back out here. So here's Iran, right? You can see Iran centered in the middle of the Persian Gulf, centered in, the middle of Turkey, the middle of, you have all of these Uzbekistan, Turkmenistan, Pakistan. You have all of these moving down to India, okay, Saudi Arabia. Most of these countries, for the most part, Saudi Arabia, Qatar, the others, they're pretty, you're talking about Northeast Africa. And what would happen is in this area, if this moved into in my opinion, into a more moderate country, okay, I think what would happen is you would see this moderate Muslim country kind of transition through the broader scope. So if I can, kind of explain what would go on here, imagine Iran all of a sudden became more moderate. And imagine now that the other countries, Saudi Arabia, Qatar, Abu Dhabi, others supported this more moderate Iranian country. And now we have a scenario where, Israel would be supporting it, the US would be supporting it, India would likely support it, China may likely support it. You have an area here where this could transition through a big block of countries here, providing a measure of, I don't want to call it normalcy, but let's call it a measure of um, lower, much lower terrorist threat activity. And that could transition this whole area into a more moderate construct. Once Iran starts to see the benefits of moving into a more moderate position, and starting to see global investment and starting the people starting to see, real economic growth, when, well, then, what, this whole area, Nigeria and Dominican Republic, and, well, Dominican Republic's in a different area, but, these areas here will all of a sudden start to lose their capacity to engage in broader terrorist threat. Essentially, we're eliminating, call it a hive of terrorist activity, and possibly changing the geopolitical landscape over here, very aggressively. Very aggressively. I would think that this entire region would move into, you know, into moderate normalcy to some degree. And when I say moderate normalcy, I'm really thinking about, Malaysia and Indonesia. I spent a lot of time down here, and it's a very comfortable country to be in. You really don't have to worry about too much if you just follow their rules, which is the first rule of travel. If you go to a foreign country, live by their rules, guaranteed. Don't think you can get away with anything being an American or anything else. Just when you go to Portugal, live by Portugal rules. When you go to Ireland, live by Ireland rules. That's the way it has to work. If you travel anywhere, you must understand you are a guest in their country. You follow their rules, not yours. Now, back to the chart. So, given where we're at, let's take a look at this from a standpoint of what this disruption has really done. So, we drag these out of the way. We take a look at a much longer term time frame. We'll take a look at standard deviation channels to try to give us a. We'll go back here to this is weekly. We'll go all the way back to 1994, and we'll come all the way across to now. This gives us a 2x standard deviation channel. We would, if we were to have any type of disruptive event, we would likely attempt to move down into this channel. This is our standard deviation range. That would be a substantial breakdown. Okay, you're talking about a 36, 37, 40% breakdown. Okay, now from the COVID lows, or let's come back over here from the 2008 9 lows, we come back over here and we take a look at this low up to this high. Standard deviation channel will put us right into this area. Okay, now based on this mode, based on this aggression, based on what I believe to be the move through this area, which is 3, moving into parabolic growth, if we were to take a standard deviation channel from what I believe is wave 4 down here, let me check real quick. COVID, wave 3, wave 4, right here, and come up to this area. Now we're looking at a standard deviation range in this area. That's the outside level. We're already below the standard deviation range, middle change. And really, when we come down to this, guys, we're talking about a move potentially down about 5, maybe 6%, maybe 8%, 5 to 8%, 5 to 8% before we start to find some moderate support. If we got down into this area, which I believe could happen, not because of this war, I think that we're looking at a potential rolling of trend down into this 5 to 8%. I'll draw a horizontal line. That will actually, I'll draw a box. That's our support channel right now. Honestly, that's our support channel for the markets. And you can see that we have just come right down into this lower support channel this morning and rallied. This is weekly. This is today. The markets are just starting to turn positive. Now, what's it going to take for us to get down to this area? 540, 560. Well, we've got a whole other block zone of data that we have to contend with. And now I posted up a couple of recent videos. I'm going to show you again how I would look at this. You can see the support zone that I've highlighted is right in what I call the defense levels. The defense levels are these Fibonacci levels here and these Fibonacci levels here. So we are staying right in that defense zone right here. This is right where price would likely find support and rally. Now we come back over here to this deeper low. We do the same thing from this 2022 low up to the highs. And now we have the defense level here. And we have the defense level down here. Now you can see that the defense level down here, I'm going to move this up just a little higher. so that it aligns with the defense level. And then I will highlight this, copy it, drag it down to here. You can see how that lines up with the 618 level and moves our defense level right down here. Secondarily, we now have separate zones of support right in this area here, which falls right into our 5 to 8% pullback. So remember, guys, this 5 to 8% pullback, which I drew right here at 8%, puts us right in the middle of this pullback zone. Do you see how this is likely to play out here? From these highs roughly down, we're looking at support very easily in this area, which is our 5 to 8% level, possibly a little deeper. So we could move down into 10% here, but really 5 to 8% is about where I think we're going to stall. And that means that, we're going to be moving into support roughly right around these lows, very likely, and secondarily down potentially around this low, very likely. So you have support around 650, and you have support down here at, call it 518. So, without going into too much detail, what happened to our breakdown? What happened to our Black Swan? What happened to our potential disruption of the market? Look, as long as capital is seeking safety away from the disruption in Iran, as well as the disruption just taking place down in Venezuela, and as long as the markets, for example, oil continues to stay elevated, and again, you can see here, let me see if we have oil over here. Yep, UK oil is up 7%. So still moving a bit higher. Likely going to be topping out. Let's take a look at UK oil here. Yeah, look at this move. Big blow off move right here. That, ladies and gentlemen, is a big blow off move. Now, where would we find the determination of actual support? Well, let me show you again. Follow Fibonacci. Price tells us everything. Notice I'm not using any indicators. Where is the defense zone? Right here. Where is the second defense zone? Right down here. Where did we run into rejection? Right across here. Where would we find support? Well, now you got a different question. This is the bigger, broader range. This is longer term support down here. So this could be reached, maybe, maybe not. We would then have to draw another Fibonacci level from here down to here. And we would then try to map out the defense levels here and here. And look at how the defense levels played perfectly to map out resistance and potentially support. Well, they made this a little too big. I'll fix it. So you see here how oil reached the defense level, stalled, rejected, has come back down. We're now down to about a 50% retracement. My assumption is that oil will move through a moderate supply disruption and then retrace back down to this level. Call it 75 to 78. And now, what that would mean for the SPY is that the SPY would reject at this level and then retrace back up here to about 700, 710, and then potentially, as the disruption continues into the resettling of Iran, move into a second attempt to move downward. Now, why do I believe we're going to get this rolling pattern? Because it sets up what I call an excess phase peak. There, you can learn about the excess phase peak pattern you want by watching my videos on TradingView. But I want you to also understand that all major tops typically roll through this pattern, pushing higher, breaking down, coming up, pushing higher, breaking down, coming up, breakdown, pushing higher, breaking down, coming up, breaking down, pushing higher, breaking down into a new low. I can go through these over and over again. This is structurally what happens in the market. This is price structure. Coming up, pulling back, breaking higher, coming back, breaking higher, breaking down. Double bottom. These happen all the time, guys. Pay attention. Rally, pulling back, breaking up, failing, breaking up, failing, pulling back into this low. So you see here, oh, here's another example. Wow, look at this. Up, pull back, breaking higher into a big correction. 2029. It happens. Now, what am I expecting to have happen back over here? What am I expecting? What I'm expecting is that if we break down into this move, we're going to likely, what did I call this? 5. That's 618, not 518. Then we have this lower channel down here at 521. Let's call it 530. So now, if we get a breakdown, which would be a broader economic, slowdown into Q2, Q3, possibly lasting into Q4 2026, I would expect this move to come down, stall in this area, maybe revert down, and then try to come back up out of this. Why is this so important? Is because this area, this lower support, 566, becomes our middle deviation channel to operate as support. And again, this 5 to 8% pullback is likely up from this high. So if you take a look at this high here, this second high, maybe around 705, we have that 5 to 8% pullback. This is about 11. This would mean that we could move down into this channel, trying to find support right here at this defense level, 608 to 634. And if we lose that support level, we're going to come down to this middle channel, which is right here. I'll make it dark green. And that's where price will likely find support. Now, given my assumption that this is a wave 3 end, this is a wave 4 pullback, and this is a wave 5-1. So I'll call that A, meaning that we've seen the big move up. This is going to be a wave 5B somewhere over here. And that will lead us to a wave 5C, which must be bigger than this wave 5A. So understand that if my analysis is correct, we're going to move through this cycle top, maybe a little higher, and then we are going to move through a an expansion phase depending on wherever we bottom, either here or here. Let's just assume we bottom near 566, and we're going to move through this phase, which has to be bigger than wave one. I believe it'll be a 1.5 to 2 times wave. So that'll be up in this area. That means we'll get a rally from 566 on the SPY roughly, somewhere up to approximately 1200. And this would be 5C. Now, what comes after 5C? Well, obviously, guys, a 5D pullback, likely coming down into this area, slightly more aggressive. And then we would move into the 5E, which could easily be as long as or as big as this 5A or 5C rally. So there you go. Now, is it going to take in this manner? Well, that I don't know. Time wise, I think this will be a bit more aggressive here. I think this will be a bit more aggressive into the pullback here. And I think this is probably going to end up near 2020, 2032, 2033. So that gives you an idea of where we're at. This move here should line up pretty close to October of, of 2026. This peak here should probably be somewhere in, let's call it this zone here. So October 2028. Through maybe March 2029. So we'll just call this sorry, 10 2028 through, and what did I say back here? March. Yeah, March, April 4, 2029. This bottom maybe around May 2030. And this base down here probably around October, November. So that's going to be roughly, we'll do it this way. /11 2026. So that means October, November 2026. So do we see a Black Swan event? No. Do we see the disruption moving the markets into a consolidated downward pattern? Yes. Through the middle half of 2026, I believe we're going to see a downward pattern moving down into the 566 to 600 area before we find support. Very moderate support, moving into a 5B pattern. Then we move into a very solid rally into the 5C pattern, targeting 1200, 1300 on the S&P or the SPY. Then we pull back down into this area, 900, possibly down into the 830 area. So really, I could kind of draw this, maybe down into this 830 area. And then we get this big rally on up. So Gray Swan, Black Swan, no, I don't really see that happening right now. A disruption in the economy because of the skyrocketing oil, which is now moving downward. Yeah. Gold and silver moving higher to try to compensate for this disruption. Yeah. US economy, UK economy, rebounding very efficiently in late 2026, early 2027, making a big move higher. Yeah. Right now, this is a trader's market. Okay. If you want to really pay attention to what's going on, you need to stay very fluid, very liquid, follow along with, my research, and I don't post videos all the time, but I want you to understand this is a trader's market. This is no longer a straight up bull market. Okay. We're moving into a counter trend correction. That's counter trend correction is going to likely last 6, 7, 8 months, maybe out into November of this year. And you need to be prepared for it. Now, I've been telling you pretty much all of this for months. Okay. Been highlighting these moves in the markets in metal for months. And you need to understand that this is going to play out probably just like I'm explaining here on this chart. You could print this chart, you could put it up on a wall, and I can almost guarantee you that 5 years from now, this is exactly what the markets are going to look like in some degree. I might be off a little bit. Remember, I am predicting now 6, 7 years out into the future. And I'm trying to tell you this is what is likely to happen. But if you want to be able to stay on top of this, you gotta stay fluid. You gotta find the right people to help you, and you gotta make sure that you're following these trends and learning how to efficiently position your capital for these next big moves. Okay, I think that's about it for now. 36 minutes. Didn't mean to go really long, but understand that this is, in my opinion, what is most likely to happen. Everybody's been asking, Brad, what do you think? Here's what I think. And remember, this is pretty much the exact same thing I've been telling everyone for the past 2 years. Okay. We completed a wave three, we moved into wave four, we've started wave five. Now we're moving most likely through a 5 wave structure. A, B, C, D, E. And then we get the big breakdown crisis event over here. I'll leave this out here as a little pink circle. You guys can guess at what that's going to be. Okay. I'll give you a little hint. There you go. Okay, now, hope this helps. Hope you understand what's taking place. Hope you understand the dynamics that are taking place. Remember, when you want to start talking about what the markets are going to do, start always ask yourself the question. Capital is always going to move to the safest, most secure, most dynamic growth environment that it can find. Okay, so Iran has a ton of capital. Literally, they are the if you know anything about Iranians, or if you know any Iranians, talk to them really. They are extremely well educated people, in my opinion. They tend to be very wealthy people. Iran was a center in the Middle Eastern world as, really, I mean, they were ahead of their time in the 50s and the 60s. Iran was the metropolis in the Middle East, where pretty much everywhere else was dirt and sand and camels. So you need to understand that Iran is not what the news is telling you. Iran is a very capable country. We need to try to support the Iranian people to make the best decision possible to try to move their country into the 21st century and eliminate this terrorist activity. So, if you do understand what's likely to happen, capital is moving away from the chaos taking place in Iran and the Middle East right now, seeking safety. But if this plays out the way I think it's going to be, in about 4 to 8 months, you're going to be seeing capital move aggressively into emerging markets and particularly possibly into Middle Eastern emerging markets. So pay attention. There's a little hint. All right, guys, talk to you later.